So we'll quickly go through what is happening in the global markets and our own markets where we are witnessing some bit of correction, and what are the sector plays that still exist in the market and broadly how you should be approaching. So I'll first start with the mid cap 150 space, which is the Nifty mid cap 150 index. This is simple candlestick chart. This is 50 DMA. This is relative strength against Nifty 50 index. Now, mid cap and small cap haven't performed a great deal post August 2024, or maybe I can put it post budget also. But if you look at what has happened in the small and mid cap space, it is pretty interesting. This phase that you see, there's been pretty healthy correction that has happened in a lot of overheated pockets that were in the mid micro small cap space. Meanwhile, large caps did well. This bit of correction that you see, this is where large caps actually started falling because FIIs again were pulling out a lot of money. You can attribute to any reason that you may understand, but quite frankly, these nuances of global money being rotated in and out of India, in and out of China, this frankly is very difficult to understand. That is why it's always better to just look at the charts and see what is happening. There's one interesting thing I'll tell you though. A broad kind of a view is that the mid small micro cap space continues to be heated. That is true. It's not going to perform a lot better. Well, in the last 2-3 months, it hasn't performed that much. But I think now markets are at such a crossroad that from here we can get 25-30% on the upside or the same kind of magnitude move on the downside as well. See, there are times when you can analyze things in a way where the probability of up move would be higher, and there are times where probability of down move tends to be higher. And at this moment, the probability of either up move or down move, I think, is broadly 50-50. Quite frankly, last 2.5 months, 2 to 3 months have been very challenging in the market because there have been frequent pullbacks, there have been sharp reversals, shakeouts are a lot common. I don't know about you guys, but I've been shaken out many times in the last 3-4 months. And it's been a bit difficult to build positions, hold positions. Nothing surprising because after amazing trend kind of movement, you always get periods of consolidation and confusion in the market. And I don't know about any other market participant, but at this stage, I can't put a finger and tell you or pinpoint you that this is where the market is going to head. So for me, the approach is always, take it one day at a time. I would just give out a broad guideline that whatever happens, do not attempt to short sell the market. Do not attempt to short sell the market because short selling rarely works, and it is simply going to lead to more over trading. This is something I had posted a couple of days back on Instagram also, the day when the markets had fallen here. So mid cap 150, coming back to the point, it's still retaining its relative strength structure. This tells you that the scope of one more up leg in the market, if we see broader market stabilizing, if we see something like Nifty 500 again attempting to move above 50 DMA sustain, I think mid small cap can again kind of surprise. This is small cap index again. Look at the relative strength. Despite of underperformance, despite of sharp reversals, broadly the indices are in a relatively better structure. Look at micro cap. Relative strength is at a new high. So there's a subtle message. I think our domestic money is still kind of coming in this particular segment. A lot of mutual funds are sitting on cash. So it's highly unlikely that unless and until you see some global kind of catastrophe happening, that our Indian markets would see a sharp kind of sell-off. I think whatever sell-off will happen or is happening is eventually going to get bought into. I do think that instead of going behind a lot of stocks, I'll just flip through charts so that you can look at the sectors and the relative strength just to get an idea which sectors are actually in a much better structure price-wise. Look at the service sector, look at the RS. I think infra sector is having a lower high, lower low in terms of relative strength. This is bound to underperform. Look at oil and gas. So it's not that difficult to figure out. Look at the RS. Look at oil and gas space. So you got to see which sectors have potential. I think my bias is very clear for the next 2-3 months. I'm only going to be behind banks, metals, realty, and IT. Because if this pocket is not going to perform, then the entire market won't perform. Banks are finally at that stage where you can expect at least some positive movement to happen. And that's why banks remain so critical to overall market health. If banks again begin to see a fall in the market, there is no way Nifty 500, all these indices won't get affected. Because again, where is the leadership? If you look at today, there is no leadership currently in the market. Banks, I would tell you, and metals. These are the two sectors that are attempting to at least stabilize the market. This is metal. This is a beautiful retest of 50 DMA. When this moves happen, people rush into positions. This is a shakeout. Look at the RS. It is improving, sustaining. This is a beautiful move in metal. So I have a lot of bias towards banks and metals. Of course, realty is a peripheral sector. Whether it works or not, it does not have that kind of impact on overall market sentiment. But banks, metals, and IT, this is a powerful combination. If you look at the Nifty IT index, it's forming a base right at 50 DMA again. So shakeouts will be common. And I think instead of going behind a lot of sectors, a lot of stocks, it would pay well if you pick a couple of sectors and then bet on these sectors, whether in a systematic way or one-time scale and pyramiding, that is completely up to you. So in the recent movement, if you see, for those of you who are students of William O'Neill, Nifty came down, rallied, made a new low. This is actually a classic W kind of a pattern. This pattern usually leads to new all-time high level. When does this particular pattern get confirmed? This particular pivot has to be taken out for it. Let's say something like 25, 300, 25, 350. If I see this level being taken out, I will again quickly scale into stocks that I want to buy, sectors I want to buy. Till this happens, I'll be patient. I'll be a bit conservative with my position size. Basically, I don't want to be too aggressive because who is to say we may just head up here and have one more leg on the downside, all right? Because quite frankly, I don't know what is happening in the market. It is just at that kind of a midway point wherein anything can happen. So I want confirmation. I would want this particular pivot to be taken out. If you go back to October, November 2023, this is the kind of W pattern that played out then also. We had a very poor retracement, but this particular pivot was taken out and then market suddenly started rallying. So I won't kind of rule out a rally in the market at this stage. I also won't rule out something like a downfall at this stage. There comes many a times a point in your day-to-day trading analysis where you just quite frankly cannot figure out what is happening. I can paint a completely bearish picture. At the same time, I can paint a completely bullish picture also. So it depends on what kind of events play out in the market. There is US election that is coming up. Again, from whatever I have watched about US election, it seems it's a very tight race. Although the kind of money that Vice President Kamala Harris has raised, close to $1 billion, it's always difficult to beat that kind of money because the messaging can go through. You can target a lot of audiences and those kind of things. Ultimately, it will come down to the economy. I think if people have struggled in recent times in the last 2.5 years, inflation and those kind of things, the earnings have not risen that much. I think people will opt for a change. Generally, that is what you see in elections. Obviously, because Vice President Harris is also part of Democrat who are currently in power, anti-incumbency also sets in. So it's an election that is going to be difficult to call, and whether it is our election, general election, or state election recently in Haryana, people obviously are losing a lot of faith on exit polls. So I quite frankly don't know what is going to happen in the US. People are going to speak on that on 4th November. Results will be out on 6th November. I'm pretty confident that if Vice President Harris becomes the president, I don't necessarily think the market is going to react that negatively because it's status quo. Market always likes status quo. The surprise would come if President Trump comes back to power. Now, how does the market perceive that? Whether market takes it positively because he has a good track record when it comes to stock markets or maybe market rallies, or whatever things he's proposing, increasing tariffs, raising import duties, if those kind of things are coming, then there will be an adjustment by the market. So how does it play out? Does the market correct initially and then start rallying when he takes charge of office in January 2025, or whether the market rejoices he becoming president again and then later starts correcting in January 2025? That is something, I don't know the answer of that. And that is why, luckily, most of our indices, most of our sector indices, whether you take digital, auto is a bit below, financial service, you look at IT, you look at realty, you know all of these sector indices are now back to something like 50 DMA. Because from 50 DMA, usually market forms a base. If it needs to have a further sell off, it keeps moving lower. Else, you also see a scenario where a fresh base gets built up and then a couple of sectors step in and take the market higher. So if you look at the yesterday's price movement in Nifty, we moved lower and then we rallied. You have to see which sectors are in a better structure than that of Nifty, which are closer to removing this particular pivot point. If you look at banks carefully, banks have actually crossed this particular pivot point. This is a beautiful engulfing candle in Bank Nifty. And I want to remind you that when this particular candle was playing out, you go to social media and see how many inverse head and shoulders charts were being shared, short selling ideas and those kind of things. As a trader in the market, it is going to pay you big time if you have a long only mindset, because short selling works 2 out of 10 times and it becomes very difficult to earn money through short selling. So when the market fell that day, if you cut your positions, cut your loss making positions, or maybe exited few profitable positions also, that was the right thing to do. But short selling was the wrong thing to do. And this is something I posted on Insta also, that do not attempt to short sell market. Market needs a new base at 50 DMA. So yesterday, that is Friday, we saw one candle in Bank Nifty forming right at 50 DMA. Now this could be a whipsaw, or this could be a start of a new kind of a mini trend where something like banks, finance, if you look at the finance space, look at this candle in finance sector also, and metal, look at this candle in metal. This is so different from what something like auto has done. Look at auto structure, oil and gas, look at energy. I'll just open up energy also for you. All these sectors have actually moved below 50 DMA, and from there they are attempting something. So if the market is to head higher, it is entirely possible that the combination of bank, metal and IT, which is a beautiful combination to have, that is something that is eventually going to bail out the market. So this was about the broader market structure and which sectors you have to be paying attention. Now let me take you through a couple of breadth data points. Now this is S&P 500 market breadth percentage of stocks above 200-day moving average. About 78% stocks are above 200-day moving average. Look at how many stocks are above 50 DMA, about 76. Look at how many stocks are above something like 100 DMA, about 81. So the breadth of the US market is exceptionally strong. And this coincides with S&P 500. Look at the structure. This is a beautiful structure. You also take a look at emerging market structure. It is beautiful. We've had a retracement and now I think we are attempting to move up. In contrast, look at what is happening in the Indian market. If you look at Nifty 500, now this is the number of stocks above 50 DMA, which is 40%. This is the number of stocks above 100 DMA, about 48%, and above 200 DMA, it is 70%, which means long-term structures of stock, that is majority of stocks above 200 DMA, is still on the bullish side, which is 71%, and it's no way extended. It's no way extended because if you look at the historical data, let's say 2010, 95%, 2014, again 95%, 2021, 95%. Even as early as 2023, it was 91%, which means there's been a silent correction that has happened in the market, in the broader market space. It gets very interesting when you look at 50 DMA also. Today, only 41% stocks are above 50 DMA as compared to something like 95% in 2021, 22, June 23, January 2024, and also June 2024. So markets have seen a substantial cool off. Again, as I mentioned at the beginning of the video, either this can be taken as a positive data point or it can be taken as a negative data point. We are at that kind of a phase in the market. If I want to say majority of stocks are below 50 DMA, that is a bearish sign. That is true. But if I say that the global markets are doing well, Indian markets have not fallen that much, PFs are still doing relatively okay, number of stocks below 50 DMA at 46% would just be positive, because it means there is a nice bit of broader market correction that has happened in the market, and now the market can see a reversal on the upside. My personal take is, of course, I don't know anything in the short term what is going to happen, but my personal take is, if you see this pivot getting crossed in Nifty 500, because Nifty 500 also relatively has a structure which is very common or similar, that is to Nifty 50. If you're seeing these pivots being taken out, the way mid, small cap, micro cap sectors are structured, I think you should quickly see which sectors are providing leadership in the market and then go behind those stocks. So have an open mind, be nimble footed. If you're confused at this point in time, a lot of people are in the same boat as you are. I don't know about others, but I definitely am in the same boat as you. It's a bit difficult to anticipate what is going to happen in the short term, how the US markets are going to pan out in the next 2-3 months, and how the US elections are going to impact the stock market. So keep things simple, analyze all those sectors or stocks that are right at 50 DMA forming bases, and if you see this pivot getting crossed, we've got initial signs that banks, IT, and metal are in a position to lead the market. So try and look at those sectors to take exposure either through ETF or go through stocks which have beautiful trending relative strength, just to see how you can catch the sector trends in the market. All right. So have a great weekend ahead, guys. Take care and be safe.